Greetings, traders. This is Mohan here, and this is our next in a series of ongoing bi-weekly Boomerang trading sessions. These training sessions are for the purpose of helping you to understand more about the markets and how to trade the markets each day with Boomerang Day Trader. I do my best to give you maximum information on each session, and every time on our new session, our next training, there will be even more things to learn. The market's kind of an ongoing learning experience, and it can be a lot of fun if you learn how to trade right and you have good experiences while you're trading. That's why I designed Boomerang Day Trader, and I'm going to show you today how to use it again. For those of you who are new, let me just cover the basics, and then I'll go over a couple of things. First of all, Boomerang operates this way. You have this arrow here, which shows the opening of a new trade channel. See these shaded areas here, these green shaded area? This is a bullish trade channel. What happens within that channel is you have this very thin line here, which is called the trade signal line, which runs up here. I'm using a cursor because later it'll help me to identify prices for you as we get into this webinar. So I'll just leave it on for now. So just see this line here? That's the trade signal line. It's very sensitive, and that's what colors the candles. See, these candles are all green colored here. That's because they're bullish, and they're leading the way up based on this trade signal line here, which is coloring the candles. Now, when the market pulls back within a new trade channel and taps the signal line, it'll instantly, in a millisecond, produce a blue dot on the line and give you a sound alarm, so you always know exactly where to trade the market. We're normally looking for the first two, maybe third pullback of the signal line after the trade channel has fired on this arrow, which is also alarmed. Within that, we also have this dotted line here, which is a green dotted line. It's bullish, and it's called the Cobra. I call it the Cobra. And that Cobra will front run usually in a color change when the next trade channel is coming. See here how it changed red? Then we got a new trade channel, and the prices hit the trade channel, move down. Same here. The Cobra was moving to red, and then it changed to green here and just barely front run this new trade channel opening here. We also have these two bands here, which are known as the dynamic trend bands. The dynamic trend bands has number 1, which is its dashed and dotted line, and this thicker solid line, which is dynamic trend band number 2. For right now, that's all you need to know. We also have these bias indicators down here, bias indicator 1 and 2, which I'll talk about later, along with an introduction I'm going to be doing today on Hyperscalp, which is one of my extreme precision add-on indicators, which allows you to see within the trade channel where the price bias is going. It's very incredible. You're going to really love it. But so for now, that's the basics. These thin lines here are known as Bollinger Bands. They're very, very popular in the trading industry, used by many hedge fund managers and professional traders, as well as intermediate and new traders. We use them here on Boomerang Day Trader because usually what happens is when you're looking for a new channel to open up, one additional confirmation is that the price will run up and tap the Bollinger Band. Then we look for it to pull back to the signal line in most cases. It's not always a requirement in the case like here where you have all of the trend bands matching, but it's an additional confirmation that the market could be ready to move in the direction of the tap on the Bollinger Band. And again, more on that later. So that's the basics of Boomerang. Now you have to remember that there are key winning virtues and attitudes, traits for a professional trader to develop the trader's mindset. And especially to be successful with Boomerang Trader, you want to develop these qualities. There's 3 basic ones, and that is number 1, the patience to wait for the right trade setup. This is true of any trade system you're going to use. You have to have the patience to wait for the exact right setup. If you don't do that, then you're just guessing on trades and violating the rules of the system. So that's the first virtue to learn in trading. The second is the ability to follow the rules and not make up trades. That kind of correlates with rule number 1, the patience rule. And the third rule is the ability to stand aside when Boomerang identifies choppy market conditions or is not giving us an exact correct setup that we want to see. So those are 3 very important characteristics to learn They're like virtuos. When you become a professional trader, you become very good at following the rules and waiting for the right setups. So that's what I want to tell you up front, and we train traders to do that. So what I'm going to do first of all is go over today's session, which is March 27th. It was a Friday, and I want to say to you this. Each and every day in the markets is a little bit different. You don't want to ever go in assuming everything's just the same routine. The routine will be there, the regular protocol of the trade setups and everything, but every day in the market's a little bit different. There's going to be different news and everything. So the most primary thing that affects the markets usually is going to be what's called the economic calendar. You can access this calendar by going to, this is the one I use, and it's the best one I think for now, is the mam.econoday. It's the Econoday calendar.com. And so you want to go to this link, econoday.com/by-week, and this is what you'll see here. Now, for example, today, Janet Yellen oddly spoke at a, it's not odd, but I mean it's odd. Usually her schedule is right in line with the market hours, but this was an odd after-hours speech that she gave at the San Francisco Fed conference in California. You have to look at this and say, how will this affect the markets today? Will they become choppy after becoming active earlier? Will they maybe become one-sided? Will she say anything at this conference that could affect things? So you always look for that type of situation. The red-starred events, the dark filled-in red stars, are the ones that are going to really affect the markets. You can see one here at the Consumer Price Index, down here at the new home sales. The next day over here on Wednesday, the durable goods orders, the jobless claims, and the GDP on today's. Now, don't let this confuse you. You don't have to learn what all these are, and you don't have to become a junior economist to trade with Boomerang. I'm just showing you it's very important because this is the routine of the markets. If you opened a pizza parlor, for example, just give me an example, because trading, believe it or not, is the exact same as running a pizza parlor in the sense that it's a business. Trading obviously is a little bit higher risk business, I would say, but inherent are risks in running a pizza parlor. Your driver could get in an accident, your delivery guy, there could be a robbery, there could be not enough flour and dough to make pizzas if you get flooded. What happens if you don't prepare and there's a big game in town in your local community where your pizza parlor serves, and you didn't know because you weren't watching the schedule, and there's a big giant game with the two winning teams joining at the local high school, which is about half a mile away or so, and all of a sudden this event goes on and you weren't aware of it, and your phone's ringing off the hook. You're getting flooded with orders for pizzas, and you don't have enough drivers, you don't have enough dough. Guess what? You're going to have a problem with that business. So in this way, I want you to see that trading is very similar. So the routine, just like that big game that came out, and the pizza parlor needs to know that, this is the routine of our markets every day, is the economic calendar, and what events are coming out, they're going to push the market around. Usually when these red starred events come out, they'll show up on the headlines of CNBC or Bloomberg, and then that's what will happen after the effects. So keep this in mind and use it every day. Just take a quick glance at it every day and make sure you know what's going on. In fact, let me go back to that for a quick second here, because this is a training webinar. This is not a webinar designed necessarily to, it's going to show you how Boomerang works, and I think you'll get quite excited, but I want to show you, our traders who own Boomerang, how to trade the markets every day and what to do to learn the routine of the markets. Let me give you an example. Here's the 27th. We go back to the, that's this week. Let's go to the previous week here on the calendar. Now notice on the previous week, what happened here, look at this. FOMC meeting begins. That's a big event on Tuesday. The FOMC meeting begins. Usually that's a normal trading day, and you'll have activity most of the day, but you have to be a little bit careful that with that meeting beginning, the market might contract or slow down a little bit. Now the next day, that's the big day where they have the FOMC forecasts, the meeting announcement at 2 o'clock. It's always the same at 2. Forecasts, and then the press conference. This is a new thing they've been doing lately. So this day, the market, I don't even trade on these days, maybe for an hour or two in the morning at the most. These days, I'm really willing to stand aside because that market, can really get contracted sometimes. Sure, it might take off and swing a lot too, but generally these are high caution days. The next day proceeded and it became a regular session, except on Friday you had the quadruple witching, as they call it, some weird name, who knows why, but it's an option expiration. Now on these days, a lot of professionals, I learned long ago, they just stand aside on that day. The day traders and the scalpers, like what we do. So the option expiration day, I always take that day off in my trading room, and I don't trade on those days. Just take a 3-day weekend, because these are the option guys' days where they're unwinding strategies, in many cases implementing new strategies based on their forecast for the following week or two of market direction. So again, study the econoday.com and look for their free economic calendar. Another important thing to do when you're trading each day, this will give you a perspective on each day. And what more wonderful thing is that to have than a new perspective each day, and understand after looking at the econoday calendar and then saying, okay, I'm going to go in here, we're going to see what's going to happen here. We got some pre-market GDP reports or whatever it is, and we're going to go from there. Well, the first thing I want you to do, and this is if you're trading with NASDAQ or any contract, even if you don't have Boomerang, and that is mark the first 5 minutes of the opening and call that the opening range. Now there's different opening ranges that traders and floor traders will follow. Keep in mind, back in the old days, that's all we had was the opening range to work off of. There wasn't a lot of these fancy internet and computer produced systems like Boomerang and everything. A lot of traders, especially the floor traders, would key off the opening range practically for all their trades. Now look at this though. Here's, for example, Friday the 27th of March. What we do is, this is a West Coast chart time, so it shows 6:30 is the opening, 9:30 East Coast. So we take the first trade after 6:30, and we can see that clearly the low is here, and the first 5 minutes runs up to this candle here. See on the bottom, 635.01. Clearly this is the high here. This is the low. So I mark them with these white dashed lines. They stand up really good in the black chart. You see that? Now just a quick glance on the session. Look at this. Prices tried to jam out after a strong down day on Thursday. Well, it was a rebound day after a stronger down early session. Look at them trying to push above the opening range and then failing and flopping back into the opening range. Well, right away, that immediately gives you vitally important information that the market's trying to get bullish, but it's struggling to do so. It's clear that it is struggling to do so. Here they try and push up again. Let's try to get them going again. So they're struggling to push that thing up higher, and I'll show you Boomerang in a second and how it relates to that. And look at that. All of a sudden, prices are flopped back below the opening range, and it just so happens, right as a new Boomerang sell channel is forming right here, the Cobra changed colors. This is one of the rules of Boomerang. Prices are under the dynamic trend band number 2 here. Dynamic trend band number 1 is changed color, and the key thing I'm going to go over today and show you many, many examples, this is very important, is that the dynamic trend bands here are squished together. I call it squished, meaning they're like within 1 point range of each other, and they're squished together, getting ready to cross over. Those are normally going to be your best and safest Boomerang trades. Well, sure enough, the trade channel opened, which was alarm and signaled. Immediately there was a pullback signal line which should have been taken by the traders, and the market just took off like a rocket ship to the downside. You had a second level pullback to the signal line here, but by that time this one had already panned out. 22 had ran down to 17.5, so there was already a 3-point move in there. And then you had this another pullback signal line, and they just continue to get slammed to the downside. Market is clearly rejecting the top of the opening range and pulling back lower. You notice that? Now look at this. Here they come down to the bottom of the opening range, and notice how they're catching support immediately right here. They're trying to hold up. They dip under it, but they can't successfully get the downside going. And as prices trade back up into the opening range, again, vital information is coming to you telling you they're not ready to really get smashed to the downside, but they're kind of bouncing back here, holding the opening range. Another dip down exactly to the opening range, slightly below it and tapping the dynamic trend band number 2, sees them bounce back up and start a new bounce back to the upside, crossing back up over the opening range, the top of the opening range again, attempting another thrust higher, and once again, because of the underlying bearish mood of the market from the previous day, you got to give them an A for trying, but a C minus for continuing, because all of a sudden they flop back into the opening range, attempt to pull back up into it again, but right away here again you're back in a boomerang trade situation with the prices squishing together here, a pullback to the sig line right exactly, look at that, right exactly at the top of the opening range, and with hardly any pressure on that sell position, a failure back into the opening range, which flops them back lower and goes all the way down here into the mid-morning, and look where they stall. Literally, the opening range bottom was 05, and they stall right here at 575, just a few ticks above it. They stall above the bottom of the opening range because of the market was trying to get bullish today, and then immediately flips into a choppy market phase. This is Boomerang right here, loudly telling you, stand aside. Look at this hyper candle here, 10 1/4, running 15 half, 5 handle candle, and then another 5.1 shooting back with the opposite color, shooting lower, and then another series of 3 pulling back. This is all the Boomerang telling you, stand aside, don't try to figure it out, don't try to place a trade, don't try to think, well, the dynamic trend bands are crossing, so I should try to take a blue pullback to sig line. It's not true. The fact is the whipsaw here is merely telling you to stand aside, not jump in here and gamble and try to figure out where it's going. That's not what whipsaw is telling you. Whipsaw is telling you to stand aside, and the counter channels, the counter-colored dots and counter-colored candles are your message saying, forget it, stand aside. You're going to miss the next move, but who cares? And what ended up happening, this was the condition rolling into the final half an hour of the market, where Janet Yellen came out to speak around this time here, and the markets greeted her as they usually do in any of the Fed presidents of the past, with what I call a cheerleading squad of Federal Reserve riggers coming in and jamming the market up to the highs above the opening range, jamming it up, trying to put on a good show for the chief inspector of the Fed there. That's the usual drill of what they do, and they did it again here as always. And then they close the market above the opening range. Because we don't usually trade boomerang setups into the last 45 minutes, sometimes the last hour, I can show you real quickly, as I showed you today, we had the first boomerang setup here. The second genuine setup was here. This was not a setup here because you're waiting for the crossover. When they get a hard one-sided move, you're waiting for that crossover, waiting for everything to match up for the next channel. When the next channel opened up, the price had already shot up, and I'm going to show you today how to deal with prices doing fast moves off the opening signal. When those happen, what they do is the price is shooting up, form fat channels, as I call them. That's these here. If you turn your head to the left, you can see the back of the body, and here's the belly sticking out here, the fat belly sticking out there, or you could call it a bubble if you want, but we call them fat channels. It's just kind of a friendly term that kind of gets you negative on them. You want to feel negative about, oh, it's a fat channel. You get a little negative feeling. You don't want to trade them. Don't waste time trading them under certain circumstances, which I'll show you shortly. Then we had, again, this squish deal here, which what happened on this one, the Cobra crossed over, the new sell channel opened up, and while they were squished together, by the time they squished together, prices had dropped hard to the downside. You can still take these trades, but my recommendation when you get a hard move like this is to trade a pullback to the Cobra, which is this line here, and you can see that's exactly where prices stopped. get a little discount on the trade signal line. You could have traded the trade signal line here and you would have been fine, but a little bit of a discount, meaning trade signal line up to the Cobra area, is usually going to see the market hold back the price and get them moving lower. You see that? So eventually this trade at the Cobra pulled back nicely from the 20 half level down to the 15 quarter level, so a nice 3-point trade within there. We trade for 3 points on Boomerang. That's our normal scalp amount, and using a 5-point stop. 90% of the time, if the trade is set up right, you're not going to hit the stop. So some traders say, oh, but shouldn't the stop be in correlation with it? Well, that's if you don't know what you're doing and you have a system that's 50% right. You might want to work on that. But if you trade with Boomerang, 90% of the right setups are going to pan out without getting stopped out, so it's a very high ratio of winners. Choppy market period. And everybody's waiting for Yellen. That's what this is. They put way too much emphasis, in my view, on these Federal Reserve people. Hopefully the next president will absolve the Federal Reserve, or at least put some collars on these people and get them to stop demanding so much control and worship. And we'll see what happens. Not a big deal. Market shot up here. Is this a boomerang trade? Well, trading the last half an hour is generally not recommended, but at least for the semantics or the mechanics of the trade, we can see that breaking out of the choppiness period, a new price ran up and tapped the Bollinger Band, pulled back to the signal line, ran up again, and now we see that the trade channel is established and all of the trend bands are established in sequence, namely Cobra, Dynamic Trend Band number 1 and Dynamic Trend Band number 2, all on top of each other. You could have bought the pullback signal line on that trade and it would have worked out beautiful. Now notice how none of those are in that sequence here. See that? Of course, the candles are spiking all over the place, but notice how they're not in sequence, really. You got the Cobra under the DTB2 here, a flat Dynamic Trend Band number 2, and one of the rules of Boomerang is not to trade flat Dynamic Trend Band number 2. Wait for it to curve up in that direction and ideally change color, and you'll do very well. So, going back to the previous day, I'll show you what happened there. Now, we had some nice swings the previous day, amazing swings in the market. It was powerful. Here's the market opening here, and these are the days where Boomerang will really shine. Now, what's the problem with this trade, other than the fact that it's right off the opening and we usually don't trade those periods? I'm moving these lines here, by the way, just real quickly, while you come up with your answer for this question. That's right. There's not enough of a squish here, a smush together of these dynamic trend bands to set up the trade. This is one of those trades right off the open where they just decided to sell off, and that was it. Yeah, the Cobra changed colors, but wasn't under the dynamic trend band number 2 until here. The color traded up here on the dynamic trend band number 1, and arguably right from here, 90 quarter to here, 92.75, there was still too wide of a spread. You might have decided to trade this pullback to signal line here, and it would have been a great trade. But generally, 2 minutes into the opening and whatever, I'm not interested myself. I just let it go. I don't care. I know there'll be plenty of trades setting up on Boomerang throughout the day. So they took a hard dive to the downside, and so now what happened? Dynamic trend band started flattening. Your first sign of it flattening is going to be that the Cobra is going to cross over the dynamic trend band number 2. That's the first sign you want to watch for. There's our tap on the Bollinger Band up there. And down here we have 76 half, 75 half. There's that 1 point squished up spread. So you could buy one of these pullbacks to the signal line here. That would be a genuine Boomerang trade. And they took off to the upside without any problem, without any pressure on your entry, which is always a pleasant experience. One of the greatest things about trading with Boomerang is that if you get the setup right, like I'm showing you today, you're not going to get a lot of pressure on your trade entry usually, and that makes trading a lot easier, especially when you get in and they fly in your direction. It's quite a nice experience, and one of the reasons we trade. It helps us feel good about trading and what we're doing. Okay, what I'm going to do here, again as an example, just because I talked about it a minute ago, let's go ahead and measure the opening range. First of all, go down here. In this case, 630 means the first opening candle, which was right here. So clearly that is going to be the high of the opening range right here. Because looking out till 5 minutes, I can see just pretty obvious that's the high. And looking out to 5 minutes here, it's also pretty obvious that the low is right here. See that? All we're taking is the first 5 minutes and asking where's the high and where's the low. So now we have the opening range, and we're going to use the same parameters that we did on the previous day where the opening range was challenged over and over. So here's that Boomerang successful trade here. We now have a pullback, but we did not get a counter sell channel opening up and then another counter buy channel opening up to set up a second level trade. So we just, unfortunately, I should say, had to see the market take off without any setup or any signal on Boomerang. That's just the way the mop flops once in a while. They took off over the top of the opening range here, and it was a powerful day on the rebound side, so they just cranked them all the way up here. You can see they're just pushing them way up until they hit exhaustion up here. And exhaustion is evidenced by the wicks of the bias index number 2 crossing over the 3-point level here as shown by this magenta line, and generally they'll go higher up towards 5 if it's going to be a super exhaustion like this one was. And you'll see the market force, this is the market force indicator, bias index number 2, thrusting above the 10-period line here, this dotted magenta line, and thrusting very hard above it here as they driving them up to an exhaustion level. And again, a classic Boomerang trade here where the Cobra crosses under the dynamic trend band number 2, which is really steep, but it's starting to flatten. As soon as that Cobra crosses it, it's going to start to flatten. The color changes right here on dynamic trend band number 2, another important requirement, unless dynamic trend band number 2 is already the same matching color as this, in other words, magenta, which it's not. So in that case, the rule is to watch for the dynamic trend band number 2 to change colors and do what? That's right. For the safest trade, let them smush together here, squish together within a point, which these clearly are. Therefore, you're free now to take the next pullback to the signal line, and down they go. The Bollinger Band tap is a good thing. Generally, in a straight down or crossover deal like this, it's important but not required. It's just a nice extra feature to track the market, especially with this perfect setup here. No pressure on your entry at all right here at 43.07, and down they go for 3 points. Now, if you had some inkling that this was going to be a stronger move, then all you got to do is track the trade, tapping the Bollinger Band, right, and keeping within the general channel within the Bollinger Band and the trade signal line using the Cobra as a stop. Little tick or two above the Cobra, you're going to want to get out of that trade if you start seeing counter-colored candles. Otherwise, just track that channel using the Bollinger Band and the dynamic or the trade signal line all the way down, which you can see that perfectly track the market all the way down until right here they tap the Cobra here. The dynamic trend band actually crossed the Cobra, which is a sign of support coming in. Notice on this, see on this lower move here, how the dynamic trend band number 1 crossed the Cobra, giving a sign of the move probably being close to an end, at least on this phase of it, because as we can see, it continued. Is so powerful on the sell-off. but that would have kept you in a very long move, or you got your 3 points and you're waiting for the next boomerang trade. Now, because we had a steep dynamic trend band here and a counter buy channel, which is not a buy trade because you don't have prices above the dynamic trend band. It's very steep, and the Cobra and everything, Cobra is blinking red and green, and the dynamic trend band number 1 is way under the dynamic trend band number 2, and it's still a red color, a sell color. So when the new sell channel opened up right here, in other words, a counter buy channel that fails, and then a new sell channel opening up here, that next pullback the sig line, you're good to go because you've already got your dynamic trend band magenta colored, and down you go for another 3 points. So you take this 3 points here, this 3 points here, and you're trading Boomerang correctly with the right setups. Now this is where it always gets tricky. So they get hammered further, right? And further, and then the whipsaw starts, and they're still going further. What I want you to do when this happens is get your focus on the dynamic trend band number 2. Don't start looking. Most of us stare at the candles because we're watching the price flipping around. We're looking at the candles. We're going, wow, look at that, look at that. Get your focus down here on the dynamic trend band number 2 and watch for number 1 to cross over. At first, obviously the Cobra is going to cross. Look for the Cobra to turn green for that counter move. Watch for the dynamic trend band number 1 to cross on the opposite side of the dynamic trend band number 2 because you want all 3 of these, remember, stacked on top of each other. Cobra, dynamic trend band number 1, number 2. As you can see, here they are. And when the dynamic trend band number 2 changes color, you're good to go right here. By that pullback the sig line, the new buy channel is signaled here and you look down and you go, everything's matching. By the first pullback the sig line here, maybe you caught the second one. Either way, it was a straight shot up for your 3rd winning trade in the row on Boomerang, or was it the 4th? Let me go back, quickly count that here. This was the one off the open we didn't take, so 1, no second level here, 2, 3, 4. 4 winning Boomerang trades in a row. You have to know the system, and you have to know the method, which is exactly what I'm teaching on this simple webinar today. It's not complex, but you can't make up rules that this is a Boomerang trade, and that it got stopped out, and why didn't you report that? Because it's not a Boomerang trade. Once this crosses over here, that move is pretty much ended. You don't want to take another trade here, but all the trend bands are matching. Yeah, but common sense just says this was a huge downside move, gigantic. These are crossed over. Right now you want to just focus on the U-shape turning up of the dynamic trend band number 2 and look for that counter move. That's what you're looking for, and that's what we caught here. There were no trades in here for Boomerang. Not if you're following the rules. If you're making up stuff, then you're on your own. But if you're going to follow my rules that I designed to give us 90% winning trades, then you're going to be a very happy camper when it comes to trading. Now look at this. Same exact thing. Here's your level 1 trade. Nothing going on here. Here's a counter sell channel with a steep upward dynamic trend band number 2, blue colored, bicolor. That fails, of course. Of course it's going to fail. And here's your new counter buy channel. That's the one you want to take. That's why we wait for those. And that was what we didn't see earlier. So there was no second trade. They just kept running up. Here's your new buy channel. Pull back the sig line right here. And same thing, straight up they go for the 5th winning trade in the row on Boomerang. And it's only been an hour of trading. That's how powerful the volume was that day. I remember that. It was a couple days ago. They were rocking and rolling. I'll tell you, it was powerful, powerful volume that day. Well, now that they've counter-flipped back to the upside after the market made a massive sell-off, show you what I call a helicopter view of this whole thing. Huge run-up, big smash to the downside. A nice run-up here, but now they go choppy. And that's to be expected, and you should expect that. When you get 2 huge counter moves like that, don't just You think, yeehaw, it's going to go on all day. It's not. Just relax and take it each one step at a time and focus on the exact crystal clear rules that I've showed you today. I've showed you all the rules today for trading with Boomerang. It's that simple. I've done it within this first half an hour here of this webinar. It's very simple, and we have them available. If you're not a Boomerang owner yet and want to become one, you can email me. I'll send you a copy of the simple rules. And those are simply that we don't trade a fat channel. In other words, if the market shoots up and forms a fat channel, I showed you what those are. We don't trade dots in the sig line at the top of a fat channel or the bottom of one. We don't trade choppy markets, which are identified easily by whipsaw candles of 3 points or more, spiking counter to each other, like you see here. Spike up, spike down, spike up, spike down. Yellow dot, yellow, blue, blue. Just forget it. And what else? The other third rule, don't trade against a flat dynamic trend band number 2. So while all this whipsaw is going on, you can see the flat dynamic trend band number 2. That's the third rule. Don't trade against that. Wait until the setup gets clear and all the dynamic trend bands are matching in a normal fashion with the right stacking. Like here, see, you got Cobra below, that's green. Then you got the green, or the blue color, green means bullish. Dynamic trend band number 1 on top of the Cobra, but all that's below dynamic trend band number 2. That's not the right stacking sequence. Here's the right stacking sequence here. Look at that. So all of a sudden they drop down, and notice the stacking sequence. Cobra, dynamic trend band number 2, and dynamic trend, or number 1, and dynamic trend band number 2, and guess what? All matching the same color. The problem with this trade is you can see the fat channel if you turn your head to the left. It was a hard, fast drop, but because they're all matching and they're stacked correctly, just try to trade a pullback to the Cobra right here. Now in this case, it went to the Cobra at 98.5 and shot up to the dynamic trend band number 2. A little bit scary, but not much. It's only 1.5 points against you. That's no big deal. We're traders. We can handle that. We get it all the time. And from there, from the Cobra, 98.5, they shot down to 91. So a nice big 7-handle drop to the downside, giving you our 6th winning trade in the row on Boomerang here for this session in the first hour and a half. What about here? What do we got going here? Well, same thing. First thing we see is a flattening dynamic trend band number 2. That's the good news. We see prices trading above that and tapping the Bollinger Band. See that? Again, this is where you want to use the Bollinger Band in particular for a sign that they're going to try to light up the top side. Usually when they tap the Bollinger Band, like you can see here, it kind of gets the market working on that side. Same thing, a tap up here. And we don't quite have the stacking sequence correct, but that's okay in the sense that if the dynamic trend band number 1, or number 2, I'm sorry, has changed colors to match the trade channel, that overrides the stacking sequence. And I'll show you something in a minute that'll blow your mind. So we can go ahead and take this pullback to the signal line right here, or right here, because all the trend bands are matching and prices are up above that, and we've tapped the Bollinger Band. You see, you've got enough evidence here. The stacking is beginning, but because the dynamic trend band number 2 is turned the blue color, you're permission to go for this trade here because that overrides the stacking sequence in a normal trade. And then they shot straight up. 7th winner in a row. Now look at this. Isn't this beautiful? Isn't Boomerang incredible? Same exact thing. Steep dynamic trend band, bullish dynamic trend band number 2 running straight up. A counter sell arrow opening up a channel. Pullback sig line, immediate failure with another counter buy channel opening up. That's telling you go ahead and take that next pullback sig line right here at 1175, and they shoot straight up again. Pretty amazing, huh? This is an old, sometimes I forget to erase them. because I use these every day. That line, in other words, is not significant. Our opening range is down, way down here. You can see it down there. You know, this market smoked the opening range, just went straight up above it there. So here's your second level authorized trade, and it's authorized because there was a counter sell channel that failed against a steep dynamic trend band and a new one opening up. You can take those trades. That's the rules. What did I say? 6, 7 winning trades in a row here. Well, how do we deal with the next one? And again, you have to keep your attention on the rules. Don't just watch the prices. They'll drive you nuts because they're just flipping all over. It'll divert your attention from the rules of the system. So what do we got here? A steep dynamic trend band. Okay, there's the Cobra crossing, still green colored, but now it's turned red. That's fine. And now we have the dynamic trend band number 1 crossing and turning red, so we're getting the stacking sequence right. The first thing was a fast downside move that opened up the sell channel. And now you have a flat dynamic trend band number 2. That's telling you, go ahead and take the trade. Well, what has happened here is the channel opened, the pullback signal line wasn't ready yet. You have to wait here. And then this blinked green here as they jumped up. So right in here at the Cobra, because of this hard downside move, right at the Cobra to the DTB number 1, you can go ahead and trade here or always watch for a trade in the space of the new crossover of the dynamic trend bands. Whenever you get a move like this where everything jumps really quick to the opposite side and there's a new crossover, you can trade, usually the best trade on those. You would have been all right if you got short at the Cobra here. You did right. 15.25 ran up to 18.25. A little bit of nervous pull back against trade. However, when this happens the one side of the market is ending a long extended move, you can often get the best price trading in the space between the new crossover of the dynamic trend band number 1 and 2, and that's right in this area. And they just reversed and took a hard smash to the downside for trade number 8 on the winning side of Boomerang. Once they got in a frenzy here, now they're going, here's a new buy channel opening up here. They shoot to the upside. 1, 2, 3, 4 spike candles up. Forget it. The signal line is going to come in right on the top of the fat channel. If you turn your head to the left, you can see the back here and then the big belly sticking out. We don't take those trades. We don't take those trades. Got to wait. And it's not the end of a big move, so we're not going to trade the space in between the crossover because it's not a big move, just a minor jump to the upside. Now we got to jump to the downside, and the same thing. The minute the channel opened up right from here was spike, 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 straight down, forming another. Turn your head to your left side. You'll see the fat channel here forming again. We're not going to trade this pullback signal line on this fat channel forming. We're going to leave it alone. Even though everything's matching here, and it actually panned out. If you got short at 675, just because you got, you're hyper and you caught it, 675 ran down to 2.25. So you still ended up with a 3-point trade there. This is arguably a correct trade because truly the dynamic trend band number 2 is matching color, which overrides everything. And this trade did work out, but I would have probably avoided this trade because I would have seen these fast spikes and said, forget it. Whenever I see this happening, usually, I keep an eye on the trade, but I'm usually right away just back away from it. I'm a little more risk adverse than most, I think. Anyway, now what do we got? So 7, 8 winning trades. I lost count. Here we go again. This thing is still active as can be. The volume was huge. Here they go. Opening dynamic trend band, opening the channel, tap on the Bollinger Band. There again, where it comes in handy. Pull back to the signal line with the dynamic trend band number 2 matching color, overriding the stacking sequence, but they're stacked nicely anyway, and shoot up again for a 9th winning trade in a row. Again, this is important that I let you know the volume was really heavy on this day, really good volume. Every day is a little bit different. You cannot expect every day to be like this day. They're not going to be. Some days are going to be very slow and choppy, and you can just barely eke out one or two boomerang trades the whole session. Other days like this, you got 9 winning trades in a row. It's unbelievable. Okay, what do we got here? New sell channel. Well, first thing you know is that there's no squish here. There's a wide spread in the DTVs. Tap on the Bollinger Band right here. They've already hit the signal line after this opening here. No trade is setting up here. Arguably, you could take this trade here. Why? Because that's when the dynamic trend bands come together. Everything's all right. The problem is this fast move down here. This trade here is going to be a little bit riskier. It ended up panning out, but it would have been a little bit riskier trade to take this because of the fast swoosh to the downside. Anyway, that market wants to keep selling off, so down they go. Look at this. Steep dynamic trend band, magenta colored, bearish color. Counter buy channel that opens up and fails against the dynamic trend band 1 and 2. See that? New sell channel opening right here. And here's the pullback to the signal line right at 19 even. All in line with the rules. Everything here I'm showing you is exactly in line with the rules. 1875 drops down to 1175 for another 3-point winning trade. 10th winning trade in a row. Same thing. Here's a counter channel. Now, we normally don't take third level trades. I can tell you that right now, and I'll show you why in a minute. Second level trades like this one, that's fine. Here's a counter channel. And this time they really try to blast them up higher, but they couldn't change the steepness or the color of the dynamic trend band number 2. And then a counter sell channel comes in here and hits them hard to the downside. Here's the pullback signal line. Well, you could argue, well, what if I traded him to the Cobra? Well, that ended up panning out. That's a fact. But it's a third level trade, and our rules are that we don't take third level trades. You could take it if you want, and you would have done well. But the general rule is that we don't take them. Now, what about here? Now, this is where I'm going to show you that squishing together rule of the dynamic trend bands is going to keep you out of trouble. Here they are crossing over a steep dynamic trend band here, right? Cobra crosses over. The prices shoot up and tap the Bollinger Band and then comes crashing back down again. But in the meantime, while this is going on, it quickly formed. You can see on the far right side over here. Watch that price. Here's the dynamic trend band at 775. And here's the dynamic trend band number 1 at 675. A 1-point spread. They're smushed together here. You buy that pullback to the signal line. The Cobra's matching the dynamic trend band number 1, and they're squished together sufficiently within 1 point to tell you that that trade's going to probably be a safe trade. You're increasing your odds of safety, and you've had a Bollinger Band tap that they drop straight back from. You buy that pullback signal line and hold your breath, because they did you get long at 950. They did pull back all the way to 7/4, so there was a little bit of pressure, but sure enough, they caught support and rocketed higher. 11th winning trade in a row, and now we're coming into the close here. You're done for the day if you even took this trade at all. 10 to 11 winning trades in a row on this was the 26th, Thursday. All right, let me show you something really quick here. So that's how you handle those fast moves that occur after an arrow opens up. You watch the structure of, first of all, are you coming off a large-scale move? And number 2, has there been a recent dynamic trend band crossing? Those are some of the things you look at. But the main thing that's going to 90% of the time produce a winner is if all the dynamic trend bands are matching and you're able to trade a pullback to the signal line early enough in the channel. Early enough means usually within 4 to 6 candles from the opening. Here's the opening channel here, for example. I already explained we had this squish here together, so that was good. But generally, you're going to want to get within the first 3 dot pullback signal line. Sometimes a fourth, but the further away you get from the opening trade channel, the more your risk increases. Actually, you know what? That's not the one we just looked at. This is almost the identical same appearance of the channel we just looked at coming into close on the 26th. And this is way over here on 3-9. But you see that rule where they're smushing together within a point will really help the case for taking those pullbacks with more safety, as long as these DTBs are closely smushed together there. Watch for that rule. It's very important, especially in this current market. Now notice here, this price runs up here. Obviously a great winning trade there. Price runs up here, no counter sell to reverse. And then here comes the Cobra crossing over the flattening dynamic trend band number 2. But same thing, you got to come in here real quick and measure 98.5, 99.75. That's close enough. It's a 1.25. So you could grab this pullback, the signal line here really quick before they get smashed to the downside. Here the stacking sequence is completely off. Everything's below the dynamic trend band, so you're not going to want to fool with this trade here at all. However, on this channel here, when they turn to sell, you've already got, and this is really important, you've already got dynamic trend band number 2, the red magenta bearish color. So you can trade those pullback to the signal line, and they're going to pan out. You with me? Same thing happened here. You got the change in the dynamic trend number 2. It's so powerful. And when that changes, I designed it. It took me years of research and developing these things to bring them to you. This Ultra Boomerang is absolutely amazing. It's the only system in the industry that guarantees 90% winning trades. What system out there guarantees 90% winning trades? Who would have the guts to say that? Only Boomerang, Ultra Boomerang Day Trader does. Sticking my neck out here a little bit, but nobody's asked for any refund or anything. Everybody loves the system. They're going, oh my God, I own this for life for $1,200. That's peanuts in this business. That's 2 trades on the wrong side of the market practically. It's all you know. So you got Boomerang, and now you're always on the right side of the market, and you own it for life for, $1,200. Anyway, so another winning trade, same principle. No counter trade, and right here, let's look at that again. Just get it ingrained in your mind. Now we're 20 days back from where we were just a while ago looking at this. But look at it, it's the same pattern. Sell pattern, they swish to the downside, but all of a sudden you got the matching dynamic trend band number 2, trade that pullback signal line, and down they go. Now, if you get off in your thinking with Boomerang, say you're a Boomerang owner and you're just somehow missing it, you're thinking too much, you're not concentrating on the method, and you're maybe overthinking it, or you're, like I said, watching it too much, the candles instead of the dynamic trend bands, I'll show you a little secret. What I'm going to do here, I'm going to go into the indicators, and I'm going to go over to the dynamic trend bands, which is right here. And just temporarily, this is just temporarily, I'm going to take that dynamic trend band number 2, and I'm going to shift it over to a 7-point reading. And that's going to fatten it up a lot, and there's going to be a reason for it. Look at that. You can't miss it now, can you? Now, I'm going to go really quickly through 20 charts, and I'm going to show you something that'll blow your mind, because I've got to move pretty quickly after this. I've gone over all the rules. I've showed you many examples. I'm going to show you something right now that'll keep you on track if you get a little whacked off the course. And then I've got to move to Hyperscalp, because I promised I would show that on here. Look at this. Dynamic trend band number 2. I thickened it up so it'd really stand up. Yellow dots on the signal line under magenta dynamic trend band number 2, sell. Blue dots above a blue-colored, bullish-colored dynamic trend band number 2, buy. You with me? That's all we're doing. Forget the other rules for now. Now, I'm not saying this is a method. This is a way to get your head back on straight if you're getting confused about these simple rules. And it happens to some traders because they're overthinking the market because they're watching just the prices instead of the trend bands. But just based on this one idea, watch what happens. Sell above the blue dynamic trend band 2, blue dots in the pullback, buy, winning trade. No trade here because the dynamic trend band number 2 is blue, right? Changes magenta here and falls off the wagon. Well, you would have caught this here using the smush rule here, the smush together prices. That's why we have these other precision rules. We don't just use what I'm showing you, but I want to show you how powerful this is. Now, you could have taken other pullbacks to the sig line based on this changing magenta here, see, and still caught a trade. But look here, blue, blue, winning trade. Still blue. Here's a blue here. 575 runs up to 10 quarter. Blue dots, blue dynamic trend band. You with me? Red dynamic trend band, yellow dot, 3 points. And this is late in the session. You wouldn't have taken that trade. But I'm just showing you something real simple that'll blow your mind. Blue, blue dot, and this is pre-market. 75 quarter runs up to 79 quarter. Blue line, yellow dots, forget the trade. Blue line, blue dot, 73 half runs up to 76, 75. Hey, it was a choppy, weird pattern. It wasn't a correct boomerang setup, but the blue line and the blue dot, it made 3 points. Pretty crazy, huh? Red line, red dot, or red line, red dynamic trend band 2, the thick line here, yellow dot, 69, drops down to 64. Gee, what a coincidence. Red, magenta, dynamic trend band 2, blue dots, forget the trade. Magenta, yellow dots, huge winning trade. Pretty amazing, huh? Magenta. Now the magenta, the yellow dots should generally be below the dynamic trend band 2. This is blinking on and off, so it's a little bit questionable. Look here. Blue, blue dots, winning trade. Blue color, yellow dots, no trade. Magenta, yellow dots right here, just barely, or a pullback sig line here and here, winning trade. Yellow dot here, winning trade. Pretty cool, huh? Blue dynamic trend band 2, you missed it here, but that's where, again, the smush together rule would have got you in this trade, no problem. But I'm just showing you based on the dynamic trend band 2. Dynamic trend band 2, bearish color, yellow dots under it, winning trade. If you just traded that, you'd stay out of trouble. Here's one that finally gets stopped out, it looks like. But again, these aren't the rules. I'm just showing you a way when you're looking at the markets to get your head back on straight here. Blue, well, actually, when it changed blue, there was no blue dots. Here it's blue and there's a yellow dot. Here it's red and there's a yellow dot. It's above the line, so that doesn't necessarily count, but still 34 runs down to 30. The matching of the dynamic trend band 2 with the colored dots on the same side is pretty darn amazing. I discovered this by accident one day. I went, wow, look at that. Yellow dots, blue, no trade. Blue dynamic trend band 2. Here's a blue dot at 44. It runs up to 49. Yellow dots under a blue dynamic trend band, no trade. Blue, blue, blue. Here's a blue dot here with a blue dynamic trend band. See this? Here's a blue dot with a blue dynamic trend band 2. Goes from 43 and shoots up to 47 half. Again, this is not a trade method, but I'm telling you, it sure does work. Blue dynamic trend band 2, blue dot at 44, shoots up to 49 half. Red dynamic trend band 2, yellow dot, down they go. You with me so far? Pretty amazing, huh? Red dynamic trend band, blue dots, yellow dot, down they go. Blue dynamic trend band number 2, blue dot, 36 quarter, runs up to 39.50, 3 points. Yellow dot, no trade, blue dot, blue dynamic trend band number 2, blue dot shoots straight up from 36.75 up to 43. Red dynamic trend band number 2, 34 on the first yellow dot on a fat channel, obviously. 34 ran up to 37, and eventually it was a crazy thing here, but it worked its way lower just based on the dynamic trend band number 2. Here's another yellow dot, instant winner there. I'm going back over a bunch of charts, and then I'm going to switch over to Hyperscalp real soon here. Dynamic trend band number 2, the thick blue line, blue. 22 pulls back to 16. This one got stopped out. This is pre-market. Well, no, this is actually real market. This is just a choppy market period. Another blue dot here turns into a winner. Oh, this was a short day, too. This was one of those short holiday sessions. Magenta just barely turned here. Pre-market anyway, doesn't really matter. I'm just showing you yellow dots, blue dots over blue. Up they go. Magenta, you know, it's just a way to keep your head on straight when you're learning to follow the rules. A lot of times, even if you just traded this method, trading yellow dots with matching magenta-colored bearish dynamic trend number 2 and blue dots with bluish. Like here it changes blue. Here's a pullback signal line at 18. 18 runs 22.5. Amazing. Here it changes magenta again, yellow dots, huge downside move. So go back over your own charts and track this, and you'll be amazed how well it works. When they're blinking like this and it's flat, you might get a different result. Here it's blue, pullback signal line blue at 5 1/4, runs up to 97 1/4. So didn't quite make it, and then they smashed him lower. But again, this is a flat blinking on and off color. Here it is magenta again. It's not a system. It's just a way of helping you get your head on track that how the market works using Boomerang. Blue, blue, up. Magenta, yellow, down. Magenta, no blue. Magenta, yellow, winner. Blinking blue, forget it. It's whipsaw. This blinking on and off because the whipsaw, and it's causing it to flatten out. Whipsaw should be avoided under all circumstances. Blue, matching blue, up they go. So do this yourself. All you do is go into your data there and thicken up the dynamic trend band number 2 and just go back and go over about 20 charts. You'll be amazed. Magenta, yellow, down they go. A little bit of whipsaw. Magenta, blue right here, up. Magenta, yellow, yellow, both of those panned out, even though this one was way down at the bottom of the fat channel. Still, just from the pure fact that this was a dynamic trend band changing colors, right here, blue, up. Blue here getting whipsawed a little bit. Again, it's not an exact method, but it's something to get your head on straight with. Magenta, yellow dot, down. Blue, blue dot, up. No trade at the yellow dots. Look at the blue dots flying into the sky. Turns magenta, miss the trade. Choppy market period on this session. Flat line, mixing colors, just forget the trade. Here, change to magenta, tapping the Bollinger Band, pulling back, straight down they go. Blue, blue, up. The majority of those are going to work just using that absolutely ridiculously simple method. Change to magenta, magenta, yellow dot here at 69, 69 drops down to 64 for 3-point scalp. Blue, up. I could do this all day, but I want to get back into showing you how to use Hyperscalp. So what I'm going to do is just go in here and change the dynamic trend band once again from 7 back to 5. Apply and OK. So now our dynamic trend band is back to the regular thickness. And what I'm going to do now is show you my precision indicator that I developed as an add-on indicator. It's only 195 bucks, and it's called Hyper Scalp. So let me just adjust some things up here. And we're going to just focus on Hyper Scalp for now. Now it appears it might have slipped out of my indicator here. Let me just check and see what happened. Okay, no problem. All I do is I go down to the Ninja menu up here, find Hyper Scalp, bring it on in. I'm going to erase the label because I don't like those labels in my charts. If you do that, just go to the label section and backspace, and that'll erase it from your chart. And also, I don't use these lines that appear when a new Hyper Scalp signal comes out. So I just go in and just change the color to transparent. See, I'm showing you how to use Ninja and Boomerang here. It's very simple. Apply that. Now we've got Hyper Scalp. Now, on Hyper Scalp, let me make sure that I have all. Oh, here's what happened. Okay, somehow it fell out of there. So all I want to do is go in here to Hyper Scalp and put it. Notice this here's panel 1, 2, 3, and I already had the lines drawn in panel 4. All I want to do is go to Hyper Scalp, go over here. See panel, it's in panel 5. I just want to move it to panel 4. That's all. Apply, and now it's beautiful. There it is. Because in panel 4, I've written the lines out here at level 5 on Hyper Scalp, and we have them here down at 2, 2.5, right around the 2.5 area. Okay, what I'm going to do now is I'm going to shrink the other indicators down so we don't pay attention to those. All I want you to do excuse me, is focus on this indicator here, which is my Hyper Scalp indicator. So let's get started fresh on a new session here, and I'll show you how this can be very effective in working with Boomerang, because what it does is it measures within Boomerang and a new Boomerang trade and a new trade channel. It measures like index 1 and 2 do, but with much more precision, because it gives you, within Hyper Scalp, it's a histogram with biased dots along the zero line. When this changes green, it's an up move. When it changes red, it's a down move. You can see how accurate it is, how they change with great precision right as the dots on the zero line change. See that? And these can be made adjustable. I keep this is the default size. Notice they change red here, and look at that, how price drops off. They stay red here. They blink green for a second. They're back on red. Little blinking on green. Very sensitive. Red. Little blink on green. A counter shift. Back down they go. Here's a shift to green right near the bottom. Up they go. This is a radical day here, so Hyper Scalp's going to indeed be hyper. Here's red, little pullback. See how that works? Now all we're looking at is the zero line here. Red, prices pull back. Green, they start moving up. Look at that too, right where the shift is, right exactly on the bottom. Very incredible indicator. Up they go. They get exhausted up here. Color goes to off green, signaling close to a top. A pullback with prices running higher. That's a divergence move. So your next green and then off color, turn to the off color green here, signals an exact top, and down they go. But again, let's just stick to the bias reading, and then I'll get into the other portion later. Now here's what I want to show you, because it's a late in the day one and very important to notice this. Big thrust up here to the 5-point line. That right away is like a big move there. And you can see when they jumped up there, they got exhausted and immediately pulled back. But because the dynamic trend band number 2 had turned the bullish color, and the other two, although not stacked on top of it, were both bullish also, there's going to come some support. So here comes the support, right? We'll be done with the webinar in about 10 minutes here. I just want to finish up with Hyper Scalp. So now the market thrusts again to the upside, crossing over the 6-period line here, 5-period line. and it's on a tear. Dynamic trend band number 1 crosses the Cobra here, and they're pushing up further. Prices are going higher and higher, but look at the histogram on Hyperscalp. Yes, making another run up here, turning to the off-color green here. Prices stabilize and try to push up higher again. Make another thrust, which is actually just barely a new high here. See on this green one? Let me open this up because this is a very important formation here. Notice how Hyperscalp thrust, higher prices, thrust, lower histogram, divergence forming, and as all topping things go, they continue to try to dig for that high again, and right here they dig out, just barely eke out a 1-tick new high, and then on this off-color green here, that's your divergence right there. You short up here, or that's where the market's going to turn. It's not a boomerang trade, but it's telling you in advance, watch for a boomerang here to start to come in. So immediately when you see this, you've got the squished together dynamic trend bands, and down you go. Now here's where it's really valuable, is you can use Hyperscalp if you're going to use that method of using the Cobra to trail a downside or upside move. Hyperscalp will actually measure the move for you. You see, as they're thrusting lower, they're not hitting the Cobra till they get down here. And what happened was they thrusted lower and lower again and lower again. But notice on this last lower thrust here, and it can be easier seen when they're squished together a little. On this last lower thrust, notice lower prices, higher histogram. Now there was still more thrust to go, but I'm just showing you that if you were trading short from up here and you see this divergence coming in, you're probably thinking, I better get ready to get out. And then they go up and tap the Cobra and you go, okay, I'll get out here. Yeah, there was more to go on the downside, but you don't know that. None of us do. And the fact is that got you out at a very nice location. And they went down further as they're coming into the close. And once again, much lower prices, but look at this. I'm just showing you this as an example. Substantially lower prices, but look at the histogram. It's basically equal with the last histogram, even though the prices moved 15, almost 6, 7 handles lower. That's a divergence sign for sure. So right here, right in this off-color change here or here, that's where the market hits the exact bottom and reverses. Let's go into a fresh day so I can start fresh showing you Hyperscalp. And this will really give you a good reason to purchase Hyperscalp now. You can go to the blog at boomerangtrader.com. Let me show you where that is if you'd like to purchase this wonderful Hyperscalp indicator. You can, if you're new to our indicators, you can purchase Hyperscalp and just try that out before you get Boomerang. I recommend you get Boomerang, but if you want to do that, purchase Hyperscalp indicator. See, so go to our blog at boomerangtrader.com, purchase Hyperscalp indicator, and you can order that right here on this link, the PayPal or any credit card. It explains you how it reads the intraday Elliott wave patterns, which I'll show you in a minute. It explains all about it. There's some Hyperscalp videos here, and you've got this webinar too. You go to boomerangtrader.com. Here's the home page. Then over on the right, purchase Hyperscalp. And like I said, it shows you here, you can purchase here on this link and watch Hyperscalp videos along with the one I'm showing you here. Just $195, and you can apply this to any stock, ETF, or active futures, and it'll be amazed what it'll do. So here's Hyperscalp coming in here off the opening. Market's making a thrust to the upside. It's immediately running very close to the 5-point level, hitting an off color, moving a little bit higher. Again, higher prices, lower histograms. This final green thrust up here, and now they're trading under this 2-point level, 2.0 level. it's destined to go lower. Turns red right here. You get a new boomerang sell channel, and here they go. Now this boomerang trade did not set up correctly because they were so exhausted up here, they just hit him to the downside right away. So that's the way the mop flops once in a while. But I'm just showing you hyperscalp. Hyperscalp goes all the way down to the extreme exhaust level around the 5-point line. And right here, as it changes to the off red color, it's the exact bottom for a move up again. Now look here again, same thing. Thrust, pull back, thrust higher, showing some divergence, but with a brand new crossover of the dynamic trend bands matching color. That is not a short or anything. Don't even think that. Hyperscalp is not a system. Boomerang day trader, what I showed you today, that's the exact system. Hyperscalp is a way to read and measure what's going on within the trade channel so you can get an idea of, it's just an additional reading on what's going on with the prices within the boomerang system. Pull back here. Now look at the same thing. Additional thrust substantially higher than here at 27.5, running all the way up to 32.25, right? But look at the histogram. Lower. Therefore, as soon as this turns off color here, you know that the move is very close to being over, which was measured on the high of this candle 31, and the high was 32.5. Now you see the change in the hyperscalp. Cobra crosses over. The squish is right here. 30.75, 29.50. It's close enough. Pull back the signal line, and down they go. And there again, while you're in the trade, you can measure the hyperscalp and watch the prices, again, move down on the thrust, lower with divergence. You see this divergence here. You see the first thrust, and you see them going down here. Say you're holding this trade. You're going to want to get out probably right in here. And sure enough, it was a big spike candle because of the divergence. Then it goes into whipsaw. Do you see? That's one of the great advantages of hyperscalp. There again, herky jerk jumps up here, back on the red side of the zero line on hyperscalp, pull back signal line with matching dynamic trend band, and down they go. Now here's an interesting little mini version of the market moving up here, but all working under this 2.0 line. Under the 2.0 line means forget it. It's a weak move, and they're going to eventually turn back lower in 90% of the cases. So they run up, make thrust number 1, the off-color green, thrust number 2, and right here is the off-color green candle, but already the market's thrusting lower, which is fine. It's just telling you be ready for a possible boomerang short signal. New sell channel, yellow dots. What color is the dynamic trend band number 2 here? That's right, magenta. And what did we just discuss about magenta colored lines and yellow dots? So sell channel, hyperscalps moving lower, boom. So if you got in this trade, you go, uh-oh, I wonder if this is the right trade. Well, you've got additional guidance from hyperscalp to keep you in there to measure it all the way lower. Same here, getting exhausted on the upside, changing to the off color, another thrust on off color green histograms. They're destined to move lower. It's just additional precision information for reading the markets and staying in line with Boomerang. Very, very valuable. Same thing here, matching dynamic trend band number 2, Cobra on the same side, squished together here, hyperscalp on the red side, sell short, and down they go with a fast spike to the downside. So that's the way you can use hyperscalp. Let me find an Elliott wave reading approach, which is very, very important. Hyperscalp reads, I'm looking for an extended move here. Ah, perfect. Elliott wave is a process that's very well known. It's present in nature itself. Ralph Elliott discovered this method long ago. It's quite amazing. It's very popular, but you have to know how to read it right. We train our traders how to use it right, both in the webinar here today and on our live training, our live Day Traders Action Room. Here's wave 1, 2, 3, 4, and a huge washout wave 5 into the close. I'm going to use this as an example. This is very common L8 wave pattern. A thrust wave 1, a counter wave 2, which in this case was rather complex. If wave 2 is complex, then wave 4 is going to be simple. If wave 2 is simple, wave 4 will be complex. So thrust 1, wave 2, very simple wave 2, wave 3 thrust, and also a simple wave 4, but a little bit more complex, and then a wave 5 thrust to the downside. Now, look at this. Look at how Hyperscalp measured the L8 waves. Here's the beginning of the thrust wave down. Everything stayed red on the histograms. Second level thrust with the histograms lower. I meant the dots in the signal line. Histograms lower. Look at wave 2 comes back and trades just barely above the 2.0 line, but generally holding under it, signaling exactly on the green off color where the new thrust of wave 2 is going to get going. Here's wave 4, same thing, moving back up, but guess what? Staying under that 2.0 line, telling you it's a simple wave 4, and also the magenta colored dynamic trend band number 2 didn't change, and then the new red colored Hyperscalp signals the beginning of wave 5 thrust, all measured by Hyperscalp here. See that? And then of course this coming into close, so it's a little different environment, but you can see the divergence starting to kick in as price just dribbled to the downside. So that's it for today. I want to make sure and show you that. If you have any questions at all about anything, be sure to email me at mohan@daytradersaction, and I'll be glad to go over anything here with you. And we'll be doing these bi-weekly webinars to train the Boomerang traders every 2 weeks, so we'll look forward to the next one. Thank you very much, and thanks for joining with us today.